A very good evening, ladies and gentlemen. This is Jimmy. Probably for some people it's morning, for some people it's afternoon. It's here evening in the Netherlands. Hope you guys are doing well. Today I want to talk about a extremely important topic. It's the topic of risk management, and I want to tackle this topic not only from a TA point of view, but also from a psychological point of view. Um, the fact is, people are losing money. They know what's right, still doing the wrong things. Basically, we know that knowing and not doing or doing is not the same thing. So I want you to learn to operate from knowing and operating from doing the right stuff, doing the right things. And this can only happen if you work on your mindset. I want you to think about how your relationship towards risk management and your biggest mistake you have recently made in terms of risk management. Just think about that for a few seconds, and then we will continue with this live stream. What's up, guys? This is Jimmy. Thank you guys for tuning in. I'm always delighted if you guys joining me. So today I want to talk about risk management. We all know this is an important topic. However, just knowing is not enough because some of you guys, you know that risk management is important, but yet making the same mistakes over and over again when it comes to risk management. So today I want to talk about loss aversion. I want to talk why risk management is such a difficult thing and how you can overcome this. If we have time, we can maybe do a quick hypnosis exercise that can prime your brain to accept losses and embrace losses and to level up your trading game. So let's be honest, risk management is maybe not the most sexy topic. People often like to talk about TA, about the technicals, indicators, oscillators, P&L, ROI, and so on and so on and so on. However, you can have a system, but without risk management, eventually you will perish. You will lose a lot of money. And I'm pretty sure most of you, including myself, we have lost a lot of money because we haven't respected risk management. The market will only respect you if you respect risk management. However, risk management is a very personal aspect of trading. Everyone has his own risk profile. Um, my risk profile was actually a little bit different 2 3 years ago, especially in 2017. I was pretty degen back at that time. However, the more my portfolio is growing, the more I put the more I think that risk management is important, and the more conservative I am becoming with taking profit and entering the market, if it makes sense. So understand that your risk profile now is maybe not the same risk profile you had last year or 2 years ago. And probably your risk profile in 2023 is maybe not the same risk profile you have now. So understand that your risk profile is evolving as you are growing, your risk profile will grow as well. So in my case, the more my trading account is growing, the more the more I think risk management is important. So within the Burp Nest, you should know that when we give calls, we always give. And by the way, we had some really good winning calls in the last 2 weeks. If you haven't checked them out, make sure you check them out. Is we always put emphasis on risk management because especially when with stop losses, Before you enter a trade, you need to know your point of invalidation. You need to understand, where am I wrong? Where will I, embrace my losses? And I use this word liberally, embrace. You should embrace your losses, because by embracing your losses, you will limit your losses. You should actually love your stop loss, by the way, guys. Don't think that by using a stop loss you lost a trade. No, you actually won the game by using a stop loss. Stop loss is always your friend, no matter what. Sometimes I'm getting stopped out from a trade and then it goes up, but that actually should be also a integrated part of your trading system. You can have a winning trade and it goes up, you take profit. That's beautiful. Sometimes you set your bids, you get filled, and then it goes a little bit up and it goes down and it hits your stop loss. You've been stopped out from the trade and then it goes up. A lot of people, they have this tendency, this belief that the market is against them, and the next time they're not really in the mood to use a stop loss. This is a big fallacy. This is one of the mistakes people make. They think, okay, the market punished me for using a stop loss, next time I just won't use a stop loss. You know what will happen then? You will lose a lot of money. It's always this. You lose your mental capital, you will lose what? Your financial capital. These two are connected. Always protect your mental capital. Your mind is always trying to play tricks. Your mind is actually trying to protect you. And it's telling you a lot of arguments, a lot of stories to not use the stop loss. Don't fall for that. Always use the stop loss and embrace it. It's your friend, no matter what. It's always your friend. So, without knowledge about risk management, profitable trading is impossible. It's simple as that. I can give you the best trading system of the world. You can follow whoever you want, but without risk management, eventually you will lose a lot of money. And it's a fact that you need maybe 100 trades to double your portfolio, for example, and you just need one single trade to wipe it out and to liquidate yourself. Just one single trade. I have been liquidated, not gonna lie, I've been liquidated 3, 4 times. Back at the time when I was using Bitmax. Um, and I learned a lot from it. I think I maybe lost more than half a Bitcoin. But back at the time, it was worth one Bitcoin was, I don't know, 4 or 5K, 6K, something like that. But still, I've been liquidated because my mindset back at the time really didn't allow me to use stop losses. I think I should talk a little bit louder, maybe. Thank you for the feedback. I will talk a little bit louder. So let this sink in, guys. When you trade, you want to trade as a casino. You want to be consistent. This market is full with randomness. Okay, there's always a random news. There's always some randomness in the market. Um, I know this is basically not a English word, but you need to de-randomize yourself in a randomized environment by being consistent with risk management and with your trading principles. Because if this is not managed in a good way, it will it just tells me that you're the gambler here and not a casino. We all know what happens with gamblers. Gamblers lose money because they are not just not consistent enough. So become the casino, one. Secondly, with risk management, focus only on that's within your circle of influence. They often say where your focus goes, your energy flows. If your focus always goes to that you don't have control about, you will suffer a lot. because you cannot control the market, period. I cannot control the market. We as a collective, we cannot control the market. We need to accept this reality. We cannot control the market. However, you can control your own risk management and your risk exposure. And I said your risk exposure is something that's evolving. It's not constant. It's dynamic. So the more you grow, the more your relationship will change towards risk management, if this makes sense. So normally I use 2% risk per trade, 1% risk per trade. But in the last 2, 3 months, I reduced my position size and reduced my risk per trade to 0.5%, sometimes even to 0.25%, or even to 0.1%. And I do this because I want to preserve my capital. I know I won't win a lot of money, not more than when I use 2% risk per trade, but it limits my downside risk, if this makes sense. I think it's completely fine to reduce your position size in difficult market environments, especially if you don't have a proven edge in this market environment. I am by nature more a swing trader. Since December, November, I started more to do scalping and day trading. And for this, I just knew I, I won't do this with 2% risk per trade or 1% risk per trade. Sometimes when I'm really bullish and everything aligns, I use 3, 4, even sometimes 5% risk per trade. But it just depends on the situation. But nowadays, I cannot remember in this year that I even exceeded the 1% risk per trade. Just so you know, reducing position size is something to be proud of, because it tells me a few things. You're taking your money serious, risk management serious, and you're still in the game. So, as I said, risk is personal. Risk management is not something that's constant, it's changing. That's normal. You always want to have is a good relationship, balancing win ratio and your risk reward. We will talk about that, by the way. And you need to understand that it's actually you who is in full control, period. You are in full control. You're the one who's setting the bids, you're the one who's taking profit, and you're actually the one who is actually determining your position size and your stop loss. We also need to understand that if you're aiming for a high risk reward ratio, don't aim for a high win rate. That's actually a little bit foolish. So if you aim for, let's say, 1 to 5 risk reward ratio, 5 risk reward ratio, a 5R, realize that you maybe just like need 2 trades out of the 10 trades, winning trades, to be profitable. Don't aim for a high winning trade if you have really high risk reward ratio, or if you're aiming for a high risk reward ratio. I will use in a few seconds a sheet that helps me to determine my position size. I use this also for leverage trading. So just bear with me. So one, you need to understand that the risk reward ratio you're aiming for. I often go for 2, 3, 4, sometimes 5. That's fine. Avoid break-even stop losses. A lot of people, what I'm seeing is, and I do this sometimes, but I use technical levels for this. When a trade is going a little bit up, they are moving really that quickly, like in an instant, their stop losses to their entry levels. And I don't think that this is a really good idea, because it increases the probability that you can get stopped out. I think it's okay to move your stop loss at entry or a little bit above entry when you're taking profit, let's say TP1 or TP2. And I mean, there's no problem in moving your stop losses. And always, always, always measure your position size for each individual trade, always. And I will tell you also how to do this. Um, you know what? Let me share with you guys a sheet. Let me check where it is. Um, 1 second. Yes, this is the sheet. I think I just gonna share my whole screen here. Uh, will you? Yes, share screen. Yeah. Um, okay, guys. Can you see what I see, guys? Can you guys see what I see? Yeah. So, by the way, for the new people who are joining me live, this is a, live trading psychology session with me. I'm a, NLP coach, a NLP master coach, with a background in psychology. Um, I like to talk about psychology and NLP because I believe that it can help people a lot. And within the Burp Nest, we put a lot of importance to trading psychology. And nowadays, we give a 7 days free trial. So if you want to check out our Discord, be my guest. It's totally for free, no strings attached. You don't need credit card. You don't need to pay. Just an email address. You can sign up and you can see all our calls and our content. So first, I want to share with you guys this. This is a risk calculator. Let's imagine, use round numbers. I have 10K on my FTX trading account, and I just use 1% risk per trade. But I use leverage. So how much leverage should I use? And what about my risk per trade? What about my position size? What about that? It's actually really simple, guys. Leverage or not, it's always about position size. It's always about position size. Um, your leverage doesn't really matter in that regard. Look, higher leverage you use, um, the more likely it is that you can get liquidated. Sometimes, even if you're using a stop loss, if your stop loss doesn't get triggered because there is a overload, you can get liquidated. Happened with me, by the way, 2 times on BitMEX. The other 2 times was just my mistake, my fault. So let me give you an example. Imagine you're charting, let's say, Link, and you can use this for short setups or long setups. You have this drop down here, and you see like there's a nice entry, let's say $15, and you're using by default 10% leverage, not cross collateral, but this is like a fixed leverage. You're aiming for $25 and you have your stop loss on $11. So this risk calculator automatically calculates for you your risk reward ratio, meaning for each dollar you lose, you can win $2.5. And it tells you also something about your position size. So with this trade setup, so with this stop loss and this entry, so basically your entry and your stop loss determines actually your position size. This is the formula. It's 25. So in this case, I shouldn't buy more than 25 coins or contracts. And as you can see, the leverage doesn't matter. You can even do 100 leverage. The only thing that happens with your leverage is your margin. As you can see. Oh, so if you change your leverage, let's say into 5, so it basically is going to use let me 1. So if you have like 1 leverage, this is your order value. And if you use, let's say, 10 leverage, this is actually the order. Like this is in stake. This is what you're really going to use. If this makes sense. If it doesn't, let me know. Because I want you. I will not stop until you understand this. I will not stop until you fully understand this. So now let's say that your risk reward ratio, I mean, your risk per trade is 2%, okay? Market is more bullish, and you have an edge. You say, you know what? I'm going to increase my risk per trade to 2%. So each individual trade or a series of trades, you don't want to lose more than $200, okay? This tells me, okay, my maximum position size is just 50. Okay, 50. There are a lot of exchanges where you have this calculator which you can use on FTX, for example. Here on FTX, what is this kind of coin? Okay, this is so let's do here like the we want to buy limit $15. We want to take profit at 25. We have a stop loss at 11, and let's say I have 10K. I've on my account. So if I buy for $1,000, wait, this is buy entry. Let's say 12 is my stop loss. So it gives me actually a risk reward ratio of 3. I don't want to lose more than let's say $100 on this trade. So then I need to basically reduce my position size into this. See? So if I want to like go really all in, I can buy this amount of coins. So then I can open a position of, what is this? 228K. I'm not going to do this because I then have a liquidation of a few cents away from my entry, and I'm liquidated. I don't like to be liquidated anymore. Learned my lessons. So what I often do is I have my if I open a position of 10K, as you can see here, I just use 0.38 of my account leverage. So my liquidation price is basically nothing. I don't have liquidation price if I execute this. So if I really go all in, this is my entry, then I just need to go down with let's say 8 cents, and I'm dead. This is what you want to avoid, basically. So this is risk management. It's really important. What you also need to take into consideration is the fees. You have fees. So with FTX, it's 0.0 this amount of fees you basically pay. Well, so if your order value is $750, so then you're basically you're taking from the market and not making, then you pay a fee of 45 cents. It's not much. I don't really incorporate fees into my system because I'm not really a high frequency trader. I trade maybe 5-6 times a week, so it's not really that important for me to take into consideration fees. So you should understand this. Your position size, important. However, your leverage has actually nothing to do with your position size. You can trade like thousands of these coins by 1,000, and it's still basically it's not important. What's important is your position size. And by the way, this calculator also warns you if your potential loss is bigger than your risk per trade. So you're risking here $200. If I would execute this trade setup and I buy 100 link coins, I can lose $400. And this sheet warns me, okay, I don't want to lose $400 if the trade goes against me. So I reduce my position size. Yeah, you guys can get the file in the Burp Nest resource. Let me check what the name of the channel is. Um, it's we believe that risk management is important, so that's why we offer all the necessary tools for people to manage their risk. So it's in you have exclusive resources, and it's in this channel, exclusive resources. Okay, now you know this. Position size has to do with your risk per trade, your entry, your stop loss, and the distance between your entry and stop loss. Understand this. It has nothing to do with your leverage. You can use one, or imagine using one. It's still the same. Using 100 or even 1,000, it's still the same. It's just like your margin is different. Okay, loss aversion. Loss aversion, guys. Um, Listen to me. This is important, and this is why so many traders they lose money. This is why so many people find it difficult to respect risk management. It's all about loss aversion. And let me briefly talk about loss aversion. We all have emotions. Fear is one of them. And fear is basically one of the strongest emotion we have, period. Most of the things we do, believe it or not, it's actually out of fear. Fear is actually our survival mechanism. We experience fear in every aspect of our life, even in our love relationships. And especially in trading, we experience a lot of fear. So, without any doubt, loss aversion is a strong expression of fear. Loss aversion comes from fear. So, the basic idea behind loss aversion is that we experience losses more than gains. And has everything to do with negativity bias. We experience actually a negative emotion event two up to three times more than a positive event. Same goes with losing. So it doesn't matter what kind of losing your job, losing your partner, losing your pet, losing money, losing a trade. It doesn't matter. The pain of losing is mentally, psychologically, about two up to three times as powerful as the pleasure of gaining. Okay, so an example, I make a trade, I win $100. I'm happy. And then I take another trade and I lose $50. So what happens actually is my brain is telling me, "Oh, you lost $50." All the focus goes to the $50, and I'm basically forgetting about the $100 I won. That's loss aversion. We all have this. It's just human nature that we don't treat a winning trade, the same way we treat a losing trade. It's not in a linear way. This is proven by a lot of studies, also by neuroscientists. We just have more brain activity around amygdala when we suffer a loss or when we just think about a loss. So now we know, and now you should know that we all have loss aversion. It's hardwired. It's just installed in our brain. And it's actually also a survival mechanism. However, this survival mechanism is not really serving us well in a trading environment because it may sound a little bit odd and strange and paradoxical, but loss aversion, like you wanting to, get away from losses and not accepting losses, will actually lead to more losses. Really, because if you cannot embrace losses, what will happen then? You will gamble, you will move your stop loss in a bad trade, you will FOMO. These are all symptoms of loss aversion. You will struggle to give up a losing trade, and you will miss out good trades, and you will do revenge trading, and it will cause you to deviate from your trading plan, to abandon your trading principles like reserving capital and risk management. Loss aversion is a real thing. And I am sure that most of you who are listening to this already experienced loss aversion at least a few times. I made at least a few times the mistakes I already mentioned: moving your stop loss in a bad trade, FOMOing in, abandoning your trading principles, and so on and so on and so on. So here in this spreadsheet, I'm just visualizing now the loss aversion. Okay. Um, so you have um a trading capital of 10K, you have a risk per trade of 1%. Okay. So if you lose a trade, how much are you allowed to lose? $100. Okay. And you're aiming for a risk reward ratio of 3. So for every dollar you lose, you can earn $3. Imagine you're in a series of trades, let's say 10 to make it easy. You have 10 trades, and no, they earned you like $900 without fees. And then you have um, 7 losing trades and 3 winning trades. However, because you're aiming for sorry, tongue twister, average R of 3, your P&L is still in the green at the end of the, let's say, the month. You're just taking 10 trades a month in this example. However, psychologically, mentally, you won just 3 trades and you lost 21 trades. How does that feel? And that's a really question. How does that feel? How does it feel to lose 21 trades in a row and then just winning 3 trades without looking to the P&L? Loss aversion. Called loss aversion. By the way, guys, if you think that this live stream brings you any value, hit the like button. Just hit the like button. I would appreciate that. Hit the like button. Loss aversion. So I am seeing here Peter asking here, what's your Discord name? It's actually the Burp Nest. So you can find the Burp Nest. You should see a link in the video, below the video. If you don't see any link, then hereby the link. There's a 7-day free trial for everyone because we find it important to educate others. We are pretty sure and confident about the quality we offer. That's why we always give a 7 days free trial. Don't buy, but try us out and then buy and make up your mind. So let me go back to this example, guys. This is a real thing, even with a risk reward ratio of um, even with a risk reward ratio of 2. So imagine you're this is also bad for most of you. So imagine you just have 3 winning trades, $600 plus. You won $600 over 3 trades, and then you have executed where is 7 trades, right? Yeah. Wait, I'm missing one. Which one do I miss? Well, anyways, you end up with losing $700. So at the end of the month, your P&L is 700 is minus $100. So you lost $100. It's okay, I would say. I mean, I also sometimes have a bad month. Doesn't matter. Eventually, it's about how you're performing over a long period of time. But now you just won 3 trades, lost 21 trades, and you lost money. What will this do with your confidence? What will this do with your mindset? What will this do with the way you're looking? What will this do with your self-image? Right? So I think, guys, education is indeed key. It's Education is extremely important. Some people, they say you can find everything on the internet. Well, I tell you something. If something is for free, it often doesn't have a lot of value. In 2021, I did my CMT, chart market technician, part one. I think I paid around $1,200 for this program. It was actually just a book, enrollment fee, doing a course online, and then the exam. $1,200. It was worth it, guys. Really worth it. I mean, just if you can buy a book for $100 or $200, and you're sure it can bring you a lot of value, just buy the freaking book. Last year, I also invested in myself by becoming a NLP master coach. It cost me around $3,000. I think it's worthwhile to use a little bit of your money for your own personal development. Don't be stingy with that. Just make sure you allocate, like you have a budget on a yearly basis, annually. Let's say 1 or 2% of your net worth, or um, of your, like, let's say one or two, or maybe 10% of your monthly income goes to personal development on a yearly basis. I think it's important, especially if you want to excel as a trader. You need to do a lot of efforts. I will admit, like, just buying a book and reading a book, it won't do the trick, but it will expand your horizon. And if you're willing to do that, go for quality. Just go try out CMT, or check out a mentor or a coach or a group. Always, it doesn't matter if it is with the Bird Nest or someone else, somewhere else. Make sure you have a supportive tribe. Make sure you have people that can educate you, inspire you, motivate you, and help you. Trading is a lonely game. Eventually, it's you who's buying, selling, putting a stop loss, calculating position size, making a trading plan, doing the trade management and risk management and all of that. But it helps a lot if you have a empowering environment. If you cannot afford, let's say, a group, or you cannot afford to pay a book, then at least make sure you have a trading buddy. Have a trading buddy and journal. You are as good as you write. Period. You are as good as you write. Write down your mistakes. Write down your thoughts. Write down the emotions you have experienced during the trades. If you don't do this, I cannot help you. If you do this, you will help yourself a lot, and you can be helped by others as well. Make sure you do this, guys. Be part of a tribe. If you cannot, if your financial condition doesn't allow you to be part of a tribe, make sure you at least have a trading buddy that helps you. Often a trading buddy is free, right? Buddy, friends, have a trading buddy. Preferably someone from your own country you can talk with, in your own native language. I think it's really important, guys, having a trading buddy, being part of a tribe. So now we know we don't treat a losing trade the same way as a winning trade, not on a one-on-one basis, not in a linear way. Absolutely not. So let me go to this example. If this is actually the outcome, you should be happy, but psychologically you're not happy. So what to do about this? So one, with loss aversion, it helps to be aware of it. I do believe in a top-down mechanism. So if you understand where a certain loss, like a certain bias, is coming from, it's for you easier to cope with it. It's for you easier to handle it. It's for you easy to manage it. So be aware of it and understand that this is an expression of fear. We are wired such a way to be fearful because it's a survival mechanism. But you also need to understand that this survival mechanism that's triggered in this market environment, it's not serving us at all. Period. Two, we as traders need to learn to accept losses without strong negative feelings. I'm not lying. Sometimes when I get stopped out, I, you know, I can feel annoyed, a little bit frustrated, but these feelings won't last for a long time, and I will only enter the next trade when I'm free of these feelings. Never, ever, ever trade when you're still suffering from the previous trade. Never ever. But because it will interfere with the decision making process. I also have losing trades, and I don't care actually if a trade ends up in a winning trade or a losing trade. I really don't care. It's always the series of trade that tells me something about my strategy and tells me something about me as a trader, not the individual trade. I just don't care. Be aware of it. Accept losses. Embrace them. Embrace them. And being aware of your thinking pattern. It's important to manage your loss aversion. Understand that your thoughts are not always true, and understand that thoughts just pop up, and they can be there. Just allow them, and understand they are not always true, especially with trading. Just let them be there. Respect your plan. This is number four. Respect your plan. Respect risk management, because the market only respects and favors and rewards people who are respecting their plan. And calculate your potential loss always before you execute a trade. And now, you guys, you don't have any reason to not do this. I just provided you this. It's really simple. You need to, to fully understand this. You need to have a little bit of a math. I don't need to have a basic understanding of math. So as you can see, position size. What do I need for that? My risk per trade, or my risk per trade. I need the potential P&L that can happen if the trade goes against me. My entry, or basically, actually, it's actually my entry and my stop loss and my risk per trade. Your leverage doesn't matter as long if your position size is correct. About leverage, to be honest, like by default, my leverage is 10 on FTX. Um, I haven't changed it. It was by default that way, I think. What you need to understand with leverage is you don't always need to do leverage, by the way, especially if you respect your trading principles and risk. You have like the default risk per trade of 2%. It doesn't matter if you don't use leverage. So, oh ships, if you don't use leverage, then it would be one. Nothing happens, right? Sometimes when you're scalping a low time frame, you see a nice setup. For example, let me pull a Bitcoin chart. If you guys don't mind. Um, Imagine you're trading this. Oh, imagine, yeah. You're seeing this. Not saying that this is a call up, by the way. Just an example. You're seeing this, and you say, hey, you know what? I think maybe things will go up, so I will long this. This is not TA, by the way, guys. Just an example. And I'm aiming for this. This is my entry. Don't want to get stopped out by this wick. And maybe in this case, you can use some leverage because this setup allows you to open a size bigger than your position size, than the trading capital you have on your trading account. So let me give you an example of that. Oh, wait. Hey, I lost my sheet. It's here. So imagine your entry is 14,45, and your well, oh wait, 44800. Your target is sorry. I need to do this correctly. Yeah, my target is 47K, for example, and my stop loss is wait, this is long, right? Stop loss. Wait, why is my risk reward ratio below 2? Who can help me? Wacht. Where's my target? Here. Because I made this in Excel and opened this in numbers. Oh wait, stupid. That's the size. That's my mistake. Sorry, I'm getting blind. Sorry, guys. So yeah, This is my. Wait, I should. This is 0. So my entry is. I'm getting maybe blind, guys. Help me. So yeah, I can open a position size of 0.67 Bitcoin. 0.67. We use the commas in Europe, so don't get distracted by the comma. And so I need to adjust it here, right? 0.67. Maybe I need to do 6 to get rid of this warning sign. Yeah, this makes sense now. However, 0.67 is around 29K, but I just have 10K here. So what to do now? Now, with this kind of setup, by the way, if I would scalp, I would use lower position risk per trade. Oh wait, 0.5. Okay. It doesn't matter. So wait, let's do the 0. Yeah, like this. So 0.33 is equals 14.6K, but I don't have 14.6K on my trading account. What to do now? Now I can use leverage. Then I only need this to open this position size, if it makes sense. If it doesn't, let me know. This is one of the few valid reasons to use leverage, in my opinion. There are a few others. For example, you don't want to, not your keys, not your coins, so you don't want to have, you don't want to expose yourself to that. You want to have most of your coins on your ledger, for example, and just use a fraction to a trading exchange. That's why you're using leverage, or you can hedge yourself by going short while you're going spot long, for example. But other than that, I don't really see a lot of good reasons to use leverage, to be honest. I hope this makes sense. So with scalping, if the distance between stop loss and entry, it's tiny, and it allows you to open a position size bigger than your trading portfolio, then okay, you could use some leverage. Other than that, I don't see really a lot of good valid reasons. Yeah, so no, the R is good here. Yeah, the R it wasn't good here because I entered the entry in this cell. That's why it wasn't good. It was my mistake. Any questions, guys, about this topic, about Bitcoin, about loss aversion, about mindset? Taking a sip of my tea. I hope you guys don't mind. So, with that said, guys, thank you very much for joining me. I would say try out the Bird Nest. There's a 7-day free trial. The only thing you need is an email address, a name, your nickname, or your real name, doesn't matter. And then you will automatically also sign up for a newsletter that always contains a lot of alpha content about mindset trading, trading psychology, charts, calls, and so on and so on. It's for free, 100%. Every Tuesday, you will get one in your inbox. And if you become part of the Bird Nest, the cool thing is we offer a broad range of services. Of course, the calls. Um, this is one of the calls. This is a good call, by the way, from Jay. So what's he saying? Some nice movement here. Let's go ahead and move stops to entry to secure this one and see if we can get to TP1 before a heavier Bitcoin pullback. Look, this is risk management. This is a good move. See, this is another live trade. Our Bitcoin trade has not triggered. Our take profit free at 43.780. Please close 20%. This is an active trade, by the way. Another trade. This is a trade I gave a while ago. As you can see, buy here, exit here. We already closed this trade. It was a really good trade. So yeah, you will see a lot of calls, but that's not the only thing, right? You will also, these are like the crypto calls. These calls are for the legacy market. You will also find a lot of FA stuff. And the really cool thing is, like this, we as a group, well, not as a group, but this was a call from our FA team. We entered, we both Stargate a few days ago, around 80 cent more or less. So it's already up 224%. So that was a good one. I invested, I think, around 1K. So I have 2,000 something profit in a few days. So we do give a lot of FA calls here. So, and here you can see that each member has his own channel where he talks about where he's sharing his thoughts about nice IDOs, pre-sales, about the fundamentals, and so on and so on and so on. I would say try it out for free. It's 7 days long. If you like it, you can become a member. If you don't like it, you have at least tried it out. So that's it, guys. Thank you very much. Yeah, thank you, Cam, for the nice words. The thing is, 9 o'clock is a little bit late for me. It's in the Netherlands, 9 o'clock p.m. So 8 o'clock p.m. UTC. So that's actually the time when I'm getting a little bit sleepy. So I'm not performing as I should perform. Maybe I'm getting older. I'm now 36 years old. But yeah, sorry if you hear any tiredness in my voice, but hope to catch up with you guys soon. If you guys have any questions, I have you can reach out to me on Twitter. Send me a DM. Sometimes it takes some time, or send me a DM on Discord and we will talk. Have a nice evening. Bye bye, guys. God bless.